James Demmert is Chief Investment Officer at Main Street Research. Now, James, a big week for corporate earnings. What kind of an impact do you think we'll see?
Good morning. We think earnings will continue to be better than expected. Investors continue to sort of wonder if they will be. In the last few quarters, demonstratedly, earnings have been better than expected. We think that's going to continue. We like what we see in the outlook for Google, for sure. We've also got T-Mobile and, as you mentioned, Tesla on the horizon this week. So we expect all of them to report to beat or exceed earnings.
And do you think that Wall Street can build on record highs here?
I think investors are worried here that the momentum may have stopped in this rally. We think it goes higher with some choppiness. So earnings are going to be the guide. If you're not fully invested, we suggest look at the earnings that are coming out, and if earnings are great, buy into that. But we do think the market will be choppy. But we're one of the few firms that has a target for the S&P 500 at 6,800 by the end of the year. That's about 7 or 8% from here. So we do think it's going to go higher, but with some chop. And that chop should be used by investors to buy those dips, particularly on good earnings.
And how are markets taken to the ongoing tariff negotiations?
Well, it's interesting, isn't it? The market obviously had a difficult time with tariffs in April. Since then, the administration's walked that back. I think the administration's much more sensitive to not only the market, but the midterm elections, which is coming up in just a year. We think the tariff negotiations will go better than expected. And I think what the market's doing is it's discounting that by sort of pushing its way higher, even though those tariffs haven't been entirely negotiated. So if our message to investors is really try to ignore the tariffs when it comes to great quality companies with strong balance sheets. I would stay away from vulnerable companies like Stellantis had some terrible numbers today. The auto industry is not a good place. So stay away from those sectors that are super vulnerable, but stay with the AI trade, stay with the energy trade. We think there's a lot of great opportunities still in this market.
James, you led us right to our next story with Stellantis. Thank you very much for your input today. James Demmert, we'll see you again soon.